Okay, testing, testing. 1, 2, 3, testing, 1, 2, 3. The Wayne in Spain falls mainly on the plains. The ants in France stay mainly in your pants. Jumbo, everybody, Jumbo. Guten Morgen. Ni hao ma. Hola. G'day, mate. Forgot to eat again. Always forget. So, without further ado, gold, oil, Bitcoin, dollar, yen, Swiss franc, and anything else that you want, just be sure to ask. Let's go. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So nice to see you again. My name is Wayne. I'm a currency trader just like you. I've just been around for a while. So I'm here to share. Today we're going to discuss technical analysis, fundamental analysis, trade planning, risk management, anything else that you really want to talk about. So that's cool. You're the boss. I'm just a humble currency trader. Cool. Welcome to Forex.Today. Make sure you subscribe, like, and comment. All these actions tell YouTube that our community is quality content. So please do that. Support the community simply by doing that. Leaving comments is especially important. It shows that you're interacting. Very, very, very cool. What else? Oh, hey, thank you to Traders Way for being the sponsor of these webinars. Day after day, week after week, month after month, year after year after year. Thank you, Traders Way. Please pay it back by visiting tradersway.com. Open up a demo account. Honestly, less than 30 seconds to get that going. When you're in the back office, check it out. It's pretty. Then download MT4, place a couple of trades. You'll see the execution speed. You'll see the spreads. You'll see the swaps. All very amazing. If you want a fixed spread account, you can have it. If you want a variable spread account, you can have it. If you want an ECN account, you can have it. It's your way at Traders Way with Trader Wayne. What else? There's other resources available. You'll notice in the links below the video. There's a link to my book. There's a link to FX Bootcamp training videos. There's a link to Traders Way. There's lots and lots of resources besides these free videos or these free webinars that I do every day. So if you need more resources, we already have all that for you. So check out the description below the video. Okay, this is where we left off. Nice. Okay, this is where we left off yesterday. So our trade plan yesterday was somewhere around this area, sell. So, up in Asia, down in London. Huh. Yeah, guess it's all right. Ripper! Sorry for eating cookies. Nice. I need new watches, man. I need new watches. I got all these. The big thing a couple of years ago was giant watches. Now I got all these giant watches and they're too heavy and they don't fit well with dress shirts. Stupid watches. All right. I'm free. Cool. Any thoughts or comments on here? This seems to be risk off. This is a sell zone. 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 Some of these are tough to catch, or you'd have to be aggressive to catch, but catch a bull. Or should I say catch a bear. Why isn't the chat coming up on the YouTube video? See if I can fix this. Probably not. Is that the chat box? Did you go what? No, I don't know where to put that. Oh, it's probably, is it, no, it's not that one. No. Alert box, viewer count, well, I'll figure it out some other day. Nice risk off. Let's take a look at this. Bitcoin's still following our downtrend. Yesterday, if you recall, I did this in white where we had the sort of double bottom, buy the dip, 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 no higher high, lower low, lower high, lower low, right? And we had this kind of yesterday, the lower low, lower high. Now, this is what you would think for tomorrow, I think, right? If you're still risk off. Okay. You guys starting to see the power of trading with the trend? If it's doing this, you probably want to sell. If you're doing this, you probably want to buy. Now, the thing is, if you used to be a bull and now it's bearish, you should still wait for it to turn bullish again. Stop switching sides every other day. Especially in markets like this. You'll notice that some of these markets went from M2 to M4 and M4 to M2, which means if you just stuck with your bias, no matter what happened, you would have made your money. Right? You guys feeling good? How do you feel? What's going on? Talk to me, Goose. Markets are moving, right? You should be happy, but I don't know if you are. Vin Ryan, no so good. So here's the bullish point of view with euro dollar lately. Up, up, up. Gotta change the color here. Up, up, up. Clearly a higher high. What do? Buy the dip in the green zone. Oh, look at that. Up, 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 up. New higher high. What do? Buy a dip into the green zone. Up, 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 up. New higher high. What do? Buy a dip into the green zone. Up, 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 up. New higher high. What do? Buy a dip into the green zone. Up, 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 up. So what's your plan for tomorrow? You see, in all these situations, and this might be where you're at, but you might be logging into New York going, oh my God, I should buy. You might be logging into New York saying, oh my God, I should buy. You might be logging into New York saying, oh my God, I should buy. Why are you saying this? Because it's been up all day. Well, that's exactly why you shouldn't buy. But, right? New higher high in New York. Oh, I guess you should buy. No! You should plan tomorrow's trade. So here we are. It's been up all day. New York opened. And you're like, oh my God, it's been up for 12 hours. I guess I should buy. No, 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 no. You don't buy high, you buy low. So if you want to be a bull, then you should wait for it to drift down like it did on Wednesday, like it did on Tuesday, like it did on Monday, like it did on Friday, and like it did on Thursday. Wait for it to come down and then buy the dip. Okay? Another way of looking at it is, well, we'll just leave it at that. What about taking profits instead? Yeah, okay, so let's switch that. That's going to be a different type of template. Okay? Now, why would you take profit here? That's a big question. Why? R3? Yeah. R3 is very unusual. So, I think, I don't know, maybe you can get closer to 110 before you start taking profit. Okay. But the weekly is destroyed, right? Destroyed on a weekly basis. So I guess you look at monthly or look at next month or anyways. Just redonkulousness. Okay? Okay. How about beast? Cool, right? You see even like the little bit of consolidation, then the breakout, pullback, roll reversal. It's all quite textbook. And then here, do you guys remember the gap? You guys remember I did gap trading on, was it Monday? What did I say? Fill gap. And what's the next part? What did I teach you on Monday when we were here? Continue mission. Thank you. Perfect score. That's exactly right. Continue mission. Okay? Not resume move. Continue mission is the exact language. So thank you. What do you think about the lesson now? This is Thursday. This is Wednesday. This is Tuesday. This is Monday, right here. We talked about on Monday how to handle this. What do you think now? Give me some feedback. What do you think? Well, the yen is, but that's not the issue. The issue is the gap. Because it wasn't weak when it gapped. Right? You got to visit, where were we psychologically back here? Oops. Let's go back in time. Okay? We were here. Well, I guess anyways. Okay? We were in that box. Was the pound weak then? It had been going up and 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 up, right? So, I did training. I taught you guys how to trade the gap. Gap fill, which it did, and then continue mission, which it did. So it gapped down, then it popped up, filled the gap, and then continued mission. I think it's even in my book. I'm not 100% sure. Michael, what creates gaps are orders in the market that collect at banks over the weekend. Okay? So it's not too complicated. Banks, especially in Asia, over the entire weekend, Friday, Saturday, and Sunday, collected orders from all their clients. And when it opened, the new price discovery was at a significant different level. Can anyone confirm that that information is in my book? I really honestly don't know. I think it is. Oh, you're welcome, Pro Trader. This is where you buy me a cigar. Okay. Well, how would I know the mindset of other people, Michael? You got to be careful. All right, there's only so much I can tell you. Okay? But you can use technical analysis to try to discover the mindset of somebody. But let's just say they changed their mind over the weekend. They're like, oh my God, this coronavirus is going to destroy the market. Okay? Or they said, that's the R1 monthly pivot. This is resistance 1. So they're like, out. Okay? This is called an inside month. You guys remember this? This is in my book. Okay? S1 to R1. Support 1 to R1 is called an inside week. Meaning, if you find support at S1, it's not supposed to be supportive, okay? It's actually a place for stops. So in this case, S1 as a bottom predicts R1 as a top, and we call that an inside week. Okay? Nobody knows if it's in the... Why was that gap significant? Because it dropped below support? No, that's just how you trade a gap. That's just how you do it. Baby G says, I feel that they are underestimating the extent of disruption of the virus in Europe. Why do you feel they're underestimating it? First of all, money is flowing back to Europe as fast as they can bring it home. Okay. Thank you, Michael. What is it? I still don't recommend trading because of the unique risks already explained. Okay, I didn't want to get into it in the book. Remember, it's a book for those entering the Forex trading business. So, okay. It's definitely somewhere. Yeah, but news isn't gap. News isn't gap. Gap isn't news. I have something somewhere about it. Well, news isn't fundamentals, I think is what, right? So like, for example, today we have weekly jobless claims. And now you're going to notice that this week, not last week, not 2 weeks ago, not 5 weeks ago, not 8 weeks ago, 12, 16, 32, 42, 122 weeks ago, we didn't really care about weekly jobless claims. All the way up until this week. Now, we're going to start being really worried about weekly jobless claims. Why is that? Max, I don't know, Rob. I don't know Rob or his opinion. Oh, did OTA go out of business? That's interesting. And I think MTI was another kind of group like that. And MTI, I remember one time I asked if I should host, I was in the Middle East. I thought, hey, maybe I should do a collaboration with them and do a live event at their office. And somebody said, oh my God, they're so scummy. I'm like, really? I'm like, yeah, they have a bad rep. Don't work with them. I'm like, oh, okay. Oh, interesting, Max. All right, so I don't know him or his opinion. Wait, I asked you guys a question. I don't remember what the question is now. Oh, you got some junk mail from OTA yesterday. Oh. Max is right. MTI sucks. Man, I asked you guys a question. I can't remember. Oh, why weekly jobless claims? Yeah, because we're worried about the U.S. economy being affected, infected, not infected, affected by the virus, and things like Wayfair laid off 500 people the other day. Like, when is it going to start affecting businesses in the United States, like travel businesses, hotels, conferences being canceled, flights being canceled, all this kind of stuff? When does it start hitting the U.S.? Remember, the one thing that's holding the U.S. up right now is consumers. So what if consumers start losing their jobs? Then they lose income, and then income will reduce spending, right? And that reduces someone else's income. Therefore, inflation falls, prices fall, and then you get something called the household wealth effect. In that case, there's going to be a feeling of less wealth, so spending stops, and it's what they call a vicious cycle. By the way, the first African American to win the Nobel Prize in economics was the guy, I can never remember his name, Stevens or something. Anyways, he was the one that did the analysis of the vicious cycle down and the virtuous cycle up. But his research actually had to do with the basic question. So you can imagine the world in the early 1960s, like let's say 1961. He wanted to answer the question: why is it that Northern European or Northern European related countries have significantly higher GDP than those that are not Northern European economies, meaning white economies, basically, right? And so he's an African American economist, right? PhDs up the yin yang, a super smart guy. So, anyways, he went out and he tried to answer that. Why was it? And it had to do with imperialism, but actually had a lot to do with climate and all this kind of stuff. It was very, very interesting. And he's the one that determined the virtuous cycle and the vicious cycle. And it had to do more with climate than culture. But you got to remember, the mentality of the 1960s was rich white people thought it was because they were rich and white. And they're like, well, it's just a natural, just natural fact, right? Everyone else is poor because they're not like us. Well, it turned out it had to do a lot with culture from climate. The climate created the culture, and the culture created the wealth effect. So it's really interesting. You should look him up, figure out who it was, and read some of his stuff. It's really interesting how climate created culture, and culture can create class and economics and stuff. So, like, for example, why is it that like island culture, right? If you live on a small island, time is really slow, right? GDP tends to be low, but attitude is slow. Like, yeah, man, we'll get to it, man, right? Why is island culture so much different than, big city culture, right? Why are there so many differences? And so anyways, it's interesting reading, and right? It's interesting reading. And especially if you think of an African American man. I think he was British born though. But anyways, he's studying race and culture back when it was, in the opinions of the people that had the power, sort of like scientific fact and then he broke that scientific fact in the face of basically racism. So it's interesting. You should go back and read it and say, oh my God, this guy was killing it with the research, right? Should really look at it. I mean, seriously, great reading. Oh, Max's FX Bootcamp is really the best. I love the way that we keep it simple. Yeah, well, that's how I like, right? Yeah, Baby G, the thing is that doesn't happen at the end of the month. I don't know any wealth manager, for example, that really sits. I guess you could. I think it's really more quarterly. But you know, I guess it could be monthly. I don't know. I don't think so though. So I'm thinking of all the wealth managers that I know, and rebalancing really often has to do with stocks and stuff because you know currencies are liquid and you don't need to rebalance per se. But let's say a wealth manager owned too much Apple stock because the price of Apple went up faster relative to everything else in the portfolio. So based on their mandate, they have to sell off some of their Apple. That's called rebalancing. Do they do it at the end of the month? See, it's someone's job, right? When you walk into the office, it's someone's job to rebalance. It's not the portfolio manager. It's someone else's job. It could even be the assistant, all right? The licensed associate, okay? Not an associate, the licensed associate. So that person would be the one that says, oh, look, we've gone over the 5% mandate, sell some Apple to get us back into the 5%. Does that actually happen at the end of the month? I guess it could. But often maybe it's discovered at the end of the month and it happens. But I like the idea though, right? I like the idea. So like we'll keep with that idea. I don't know if it's entirely true though. That's the problem. But I like the idea. It doesn't have to be entirely true as long as you don't bet. So here's how some people deal with this, Baby G. And I'm not saying it's you, Baby G. But some people say stuff like, it's the end of the month, so therefore I'm going to throw down a big trade because of the month-end flow. And they just, boom, the month-end flow is going to save me. That's not correct. Okay, that's not correct. That's not going to work. But you could use it in your analysis and say, well, in this case, I'm expecting month-end flow, and you can kind of prepare and set up trades. And so, you know, again, I know you know to be cautious. I don't think that true month-end flow, year-end flow. So let's switch it though. Okay, Baby G, let's switch this. Let's go to a yen pair. Okay, one thing that you can consider with yen soon is year-end flow. Year-end flow. Now, what percentage of institutional investors in Japan care about year-end taxes? What percentage of Japanese institutions worry about year-end taxation? Everybody, right? So, all right, so Baby G, like, with the monthly that you were stating, like, what percentage of institutional investors are, you know, seriously managing their money around a month-end rebalancing? It'd be small. It wouldn't be everybody. And then what's the timing of all that? You know, monthly is too loose. There's too many strategies. There's too many types of institutions. There's too many. I mean, it's too diverse to just say month-end money flow. It's too open-ended, okay? But year-end, that's legal, right? Now, that's legal. We know that's 100%. So, okay. So now you're going to have sort of year-end flows. So if I were to kind of push, like take something between both of that, maybe quarterly flow. But even then, even with year-end flow, I don't throw down a trade based on year-end flow, okay? But let's talk about this. On April 1st, Japanese institutions have to pay taxes. Okay? So we know that's going to happen on April 1st. So between now, which is almost March 1st, and then money will probably need to flow back to Japan. So now you have to ask yourself, if you're the chief financial officer of Toyota or Mitsubishi or Honda, when do you bring money home? Okay. Oh, more volatility nearer the end of the month? I don't know if that, I don't know. So I'm not trying to discredit you, Baby G. I'm trying to think about it. Okay. I'm trying to think about my experience. And I don't think I've observed that. I don't think I've observed like more volatility at the end of the month. Yeah, I don't know if I can confirm that. I'm not denying it, but I'm not confirming it either, right? I think wherever you got that might have been blown up a little bit more to prove whatever point they were trying to play. And maybe it had to do with a different market. Maybe you're talking stocks. And if you're talking about stock trading, individual stock, you're not even talking S&P 500, right? So if you're talking about individual stock trading, like literally trading Apple, in that scenario, probably. And would it be rebalancing? Maybe, yeah, probably. But that's not applicable to stock indice trading, right? Futures contracts. And it wouldn't be applicable to, currency trading or other types of things. But an individual single stock, a cash position in a stock, yeah, that probably is true. Okay? But don't extrapolate that out to all financial assets. In fact, it'd be no other financial assets except that single stock. And then rebalancing, okay, that would make sense to me. At the end of the month, you might say, oh my God, we have too much Apple. We need to bail on some of this. Okay? And we need to rebalance our portfolio to stay within our mandate. That would be 100% true. Only in a single stock trade. So I don't know if you took some training or watched a webinar or watched another trader and he was talking about rebalancing. That would be for a single stock and nothing else. Okay? Prince Philip, I used to pay a significant amount of money to get those resources that you're talking about. Prince Philip says, have you ever used the information research from, I get, right, so, right, I get stuff from Morgan Stanley and Merrill Lynch, their wealth management teams. I get stuff from Goldman Sachs, but those are just because of my relationships with those firms. But I used to spend a lot of money, or a fair bit amount of money, to get research from all the major institutions. And in fact, not only their research on their expectations for the market, but their actual positions as well. And here's my general point of view. They suck. I know as young retail traders or small retail traders, we worship these large institutions because they make so much money, but they suck. You have to learn to understand that. The analysis is simple at best. Their trading is pathetic and general as can be. And some firms are just horrific traders. Horrific. Credit Suisse is, oh my God, they trade like that's a trading firm. So when Morgan Stanley says something, they're like, we think euro dollar will be at 110 by the end of the year. So we suggest buying dips at, 105. You're like, oh my God, that is so generic and wide open. And did you even look at the chart? Exactly 110 and exactly 105? Are you just guessing? And there's such big open-ended trades. You're like, I think you're guessing, bro, right? And then you look at, right? And that would be the one trade for basically the year. And then you look at Credit Suisse. They'll do 35 trades a day right? And 29 of them are losers. And you're just like, what the hell are you doing, Credit Suisse? Ba-boom, ba-boom, down, down, short, short, long, 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 short, short. Like, these guys are all over. Are they making it up? Are they losing on purpose? Like, is this trading desk hedging something else? Because holy crap, these guys are terrible. Right? You guys are the next generation of big money. You don't quite believe me yet, but you are needed by the rest of the world. There is a vacuum that needs to be filled by you. You, right now, could probably do a better job than most of the professionals out there. You don't quite believe me because we worship these guys. Oh my God, these hedge fund managers, these bankers, right? You remember how I laugh when I once in a while I get an email from some group and it says, learn the secrets of, banker inside information, right? All this stuff. Trade like the bankers do, the secret inside. Like, oh my God. Why would you want that? Those guys suck. The thing is, they're trading $500 million and you're trading less than $500 million, right? So anyways, you are better. You are better. If not now, you're going to be better. That's right, Peter. They went to Harvard, but Harvard doesn't teach you how to trade. Harvard teaches you how to work hard. Harvard teaches you how to be a world leader. Okay? You're already smart, right? You're already smart by the time you get to Harvard. So they don't make you smart. You're already smart. Okay? So what does Harvard do to an 18-year-old? Like, why do I argue my children should go to Harvard and not consider any other university on the planet? Well, because when you walk into Harvard as an institution, they create people that want to change the world in a positive way. That's what Harvard College does. It's mind-blowing to the extent to which the university does this and has been doing this, right? Now, Yale and all those other schools, I'm sure they're fine. But it's not the same thing. And then like University of Georgia, hey, everybody loves University of Georgia for their football program, right? Everyone around me is a Dogs fan. I'm like, okay, I have nothing against the university, but it ain't Harvard. So I'm like, I'd rather send my kids to Harvard or a community college somewhere else and not waste the money. Right? Just right. So anyways, that's what Harvard does, but it won't make you. It doesn't make you smarter per se. I mean, you'll have more education, but you're gonna have to fight and think and right. I don't know. It's great. Anyways. Send your kids to Harvard. I could spend probably. Max is Harvard pumps out mostly good little liberals. Well, all schools do. All schools do, Max. Okay. Maybe not West Point, but yeah, send your kids to West Point then. That's just the nature of the beast. Now, Harvard is it's actually a liberal arts school. So they figure when you're 18 or 19, you don't know shit about what you want to do the rest of your life. So you don't even really have a major. You just go through Harvard College and they give you a very well-rounded education and focus on building you into someone that wants to lead and create a better world. They're going to teach you how to be, or even just want to be, the CEO of whatever it is you're going to do. It's going to be amazing. Then once you get your Harvard degree, then you go to grad school and specialize. It's kind of like having a degree now, like declaring a major, I mean. You don't even get to that point until you have your bachelor's, okay? Now you got your well-rounded education, you got your mindset, you're going to be the boss. Great. Then you have to declare, do you want to go to the medical school, right? Do you want to go to the Kennedy School? Do you want to go to the business school? Do you want to go to the engineering school? Do you want to go to, so on and so forth? All these graduate schools, right? And that's where you specialize your expertise. So anyways, it's an amazing place, guys. Really amazing. Think of it like someone actually working at the Federal Reserve Bank as a senior economist taught me macroeconomics. Think of that. The Kennedy School is the School of Political Science, the K School. Yeah. It's a great school. One of the things I'd like to do, so I'm going to meet up with you guys in New York in 3 weeks. I'm going to send out an email eventually once I get around to it, and we'll meet up at the Harvard Club in New York. But I was thinking at some point maybe in 2020, at the end of 2020, I rent a room in one of the Harvard buildings, and I do some Forex training. Like, let's say I redo the day trading course, but we do it at Harvard, and you come to Harvard. I give you a tour of the campus, right? I can give you a tour of the campus, take you into some of the buildings and stuff, and then go back and maybe, like, I'm thinking Harvard Hall. It's like I think it's the oldest building in the old yard. Anyways, we can go in there and we'll do some training for a few hours, and you get to like be in class at Harvard. Would anybody be interested in that? Getting that experience? Would anyone jump at that? Yeah, Cambridge, Massachusetts. Yeah, I mean, cool, right? All right. All right, so anyways, let's go back to this. I look at this and I say oil's down. Or more specifically, yesterday I looked at oil below. It made a lower low yesterday afternoon. So maybe about 5 hours after our webinar. Oil made a lower low. So I'm like, oh. Okay. So remember, let's go back to yesterday. Yesterday, my profits seem to be so far away. So yesterday we were here. Oh, make this fatter. Mama. Yesterday, my poverty seemed so far away. Okay, so yesterday we were here. Okay? So what does this mean? It means if you get a low... it's still white. Let's do black. You need a lower low up in Asia. Drop it like it's hot. And if you're going to do this, you need oil to be making a lower low. And we did. Okay, it happened a few hours after this, so by the time we were down here, okay, oil had made a lower low. So around this time frame, we were bottom, okay? So CAD yen was bottoming, but oil made a lower low. So there's two ways to trade this, of course. Too bad. I didn't mean to erase it. One is let it make a lower low, catch the pullback. And two, let it rise and sell the rally. Notice that it did both. Well, here's, right, Javier, it's really interesting because I'm already mourning my my graduation, and I'm already planning to go back after graduation. So I'm going to get a graduate certificate in real estate. It's sort of like I don't want to give up. I don't want to give up my access to the university. Okay? So for example, for me to give you a tour of campus, I basically still need an active student ID to get into the buildings. So it doesn't matter how many degrees you have, you still want to be taking one class at least so you can go anytime you want, right? So it may never end. I might be an 80-year-old man still taking classes. And you're like, Wayne, what's the big deal? That's only 2 more years. I know. So anyways, notice, guys, that it did both. All you had to do was be a bear. It gave you everything you wanted. Okay? Now, the pink one happened at the London Open, right? So there's 2 times you can expect this, right? You can expect this at Asia Open. By the way, this is out of the day trading course. Okay? You get the Asian Open move. Oh, how funny. How funny. I didn't mean to make it that thick. Okay? Or you get the London Open one. And it gave you both. It gave you the Asia Open and the London Open. Okay? And this is really when the money comes back to the market. So one of the discussions we had in the day trading course is, you know, for some people they can't trade this because they live near the London time zone. So the only time they can trade is this. Ultimately, how much, I mean, sure, we had this big move, but ultimately, what's the major difference in price? Hardly anything, right? But notice one is before the breach and one is after the breach. But the difference is like 25 pips. It's hardly anything. Okay? So it just comes down to your timing. Sell, sell. And look what we're talking about now. Tomorrow, up to 82.5 and dump it. Okay? This is how you do it, guys. Between now, right, in the next 12 hours, I'll probably let it drift up and sell this. Okay? Like here, like here, like here, so on and so forth. Okay? Sell, 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 sell. Max is going the Carlton Sheets way. Well, I want to teach you everything. So my next vision is to teach you to trade stocks, bonds, currencies, futures. Like you should be trading wheat, not just gold and oil, right? But on top of that, finance, economics, both micro and macro, money management, how to be a professional investor, how to be a professional trader, how to be a money manager, but also things like real estate. I mean, on and on and on. What if you could get a complete sort of Harvard degree without going to Harvard? Well, how could you do that? Well, I have 2 degrees from Harvard. Why don't I just teach you everything I possibly know about everything? Well, I know you're trying to be funny. But anyways, so, right? So I just thought, well, if I was going to teach you like real estate finance and time value of money, which is tied up into that real estate, but I mean like a real education. We have to read, we have to go back in time and read like not how to flip houses type university, but like let's talk about rent. Where does rent come from? What is the power of rent? How does rent get priced, right? We have to go all the way back into time and talk about property ownership, okay? And we're going to have to read books that are like 800 years old and start where the math started. The oldest economic philosophers of the world, and really talk about from that point of view, where does rent and pricing of rent and real estate, because that's all real estate is, where does it all come from? Where did it all start, right? And go from there. Like, I mean a real education. Right? Not how to flip houses and get rich quick. There's plenty of that out there. But give you a real education. Okay? So for example, who hates rent? Who thought rent was evil? Yeah, renters. Yeah, no. Marx. That was the basis of Karl Marx, Marxism. So we should probably read some Karl Marx just to see the counterpoint. Okay? Just to see the counterpoint. But wouldn't you be an educated person in economics and finance if you even knew what Karl Marx was saying? You might not like him, but you would know the counterpart for where rent came from. Because, like, the world could have been different if, right? If things had just been slightly different, we might be in a world like that. Right? I'm trying to think of the guy we would be reading. I have Hobbes stuck in my brain. That Hobbes and Locke, that was more libertarian. Carlos. I can't think of the guy's name. We would have to start with him. I can't think his name. I know where we'll start because it came down to like the time of the Corn Laws. I don't know what year the Corn Laws in England were. Anyways, but it came from like looking at a farmer's field. So I don't know. Let's just kind of for a second here, and then I'll move on. Farmer's field. Some farmers' field produce more yield per acre. Some produce less. Some are amazing. Most are pretty average. Some are horrible. Okay? Some just, the land is poor and it's not very close to the market. The yield is low, but it's cheap. Because of that. Why? Ricardo. Is it Ricardo? David Ricardo. Maybe. It might be Ricardo. Did he do Corn Laws stuff, John? So anyways, right? So if you were analyzing 3 fields and you had to rent the fields from the landowner, right? Remember, this goes back many, many years, okay? So if you rented a field from a landlord, right, the lord of the land, you have 3 choices. Land that's close to the market and it's high yield. Land that has mediocre yield. It produces pretty good, but not as good as the other one. And then lastly, land that has poor yield per acre because the soil is not good. The conditions are not good. Maybe it's farther from water or something, right? What are the prices? Now, it's interesting how to answer that question. I'm not going to go into it today, but it's shocking once you know how these things work. Now, what does this have to do with reality? Well, how much does it cost to rent a Starbucks? Right? How much does Starbucks pay to have a coffee shop? Because they don't own the building. So, right? Why isn't there like a mattress store or a liquor store? Right? Or a bank? Why the Starbucks? And it's very interesting how you answer that and the analysis that goes into that. But wouldn't you like to have that type of knowledge, not just me doing a class on how to flip real estate and get rich quick, like really, truly understand history and the basis of human intellectual thought on this point, and then be able to, right? Then be able to flip houses and get rich. Okay? So anyways, that's my thought. We can do the math together. So anyways, I'm doing a class over the summer, and it has to do with institutional financing of real estate deals. So like issuing bonds to raise the cash to do large institutional level real estate deals and development deals. So that's what I'm doing over the summer while I'm on vacation. So that would be like one of the classes that I can teach you how to do that, how to issue bonds to finance your large real estate deals. If you don't mind, I could put that into a course for you, right? So imagine I could do a real estate course where we're talking about all of that kind of stuff. You'd come out truly Harvard educated, except I'll charge less than Harvard charged me. Anyways. Yeah, I guess it was Ricardo, wasn't it? Probably was David Ricardo. Thank you to whoever said that. I think it probably is David Ricardo. That sounds about right. Iron law of wages. That sounds about right. Yeah. By the way, corn doesn't mean corn. Corn means grain. British political economist, one of the most influential of classical economists with Adam Smith, and believed that the court imposing tariffs on agricultural products ensured less productive domestic land would be cultivated and rents driven up. Yeah, that's our guy. So we're going to start with David Ricardo if I teach real estate. So we're going to go back. Way back. By the way, so yeah, 1772 to 1823. Yeah, so it goes right in there, value theory and rent, theories of wages and profits. So like we're going right back into these things, man. Imagine that, like you're there when the math was developed. That's where we're going to start. Okay? So anyways, hopefully you're excited about that. So I don't want to give up my, so I don't know how many degrees I'll get, but I don't want to give up my access to the university. So I'll probably just keep taking classes forever. All right. So yeah, Genzer, Oscar Mike. So you should be watching things like 4-hour 21s, right? Right? Down, 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 back to the 21. Down, 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 back to the 21. Down, 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 back to the 21. Down, 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 back to the 21, down, 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 back to the 21, down, 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 back to the 21, and you keep watching this. Now, the 21 lags a little bit, so that's why I thought you guys would like this. Apparently, most of you don't like this, but I'm not sure why. Maybe just clicks with me, but this is pretty obvious, you know, that you should just keep selling. So red hot for selling, and then it's cooling off, cooling off, cooling off, cold. Okay. Thank you, Ron. Yeah, if it wouldn't trouble you too much, would you click the like button? I know I've been babbling on today. I'm sorry. But still, if you can, click the like. All right, so what do you want to do here? Money is flowing back to Europe. Apparently, they need money. So if you're a bear, you just do your job. Where is it likely to turn bearish? Is that right, Max? Yeah. So I own those books, but okay. Funny thing is, I sold this at 120 a while ago. I guess back down in here, and then I got knocked out for negative 33 on this spike, and it's just sort of farted around. So, so I got to wait my turn. But the way I'm looking at it now from a bearish point of view is basically this. Okay. So day traders are going to have to wait for the step down. If you guys remember from the day trading course. By the way, is anyone going to join the swing trading group? We're meeting today. Swing trading group's meeting today in 2 hours. And inside the swing trading group is not just the swing trading course, but also the day trading course. So you can get them both by joining the swing trading group right now. Right on, Joel. Then we'll see you there. So on the smaller time frame, what we're looking at, okay, is this. Then you get your 3-wave correction. And now as a bear, I'm hoping, or I'm planning is a better word, I'm planning for this. So I can confirm that with a step down before I start throwing down. Well, Baby G says she has no idea. Well, let's put it this way. Yen has been a safe haven for 30 years. I'm not quite ready to throw it out yet. I know last week there was a yen exodus, but I'm not ready to give up on the Japanese yen. Not quite ready to give up on the Japanese yen. So I'm just waiting for my time. You got to remember that, guys. If you have a bias, so I'm going to say buy yen during risk-off moves. Great. So now that's my bias. I don't know if it's right, and like maybe Baby G says, maybe that whole thing is over. Well, I'm not ready to think that way. So I think what I think. I'm still going to do what I want to do. I still want to buy Japanese yen. Do I sell it here? No. Okay. Would I sell here after a move like this? Yes. So I wait. I don't, right? I wait to be right. If I'm not right, I don't trade. Okay? That's that. Okay, which means I currently get a move like this and I trade, or in the future I get a move like this and I trade. And if I don't get one or the other, I don't trade. I'm going to be 100% right. Okay, so if this gets rejected at what I see as resistance, and then I get like a lower low, lower high, sell here, lower low, lower high, sell here, lower low, lower high, sell here, right? If I get these, I'm trading and I'm going to be right. If I don't get those setups, I don't trade. That doesn't matter. Okay? Frederick says 121 and then down. I'm good with that. That's basically what this is, right? I'm cool with that. But the thing is, Frederick, what I need is up, down, right? I need confirmation. If the market doesn't give me confirmation, I will not trade. I am the boss. I dictate my terms. I get what I want. Enough said. Okay? So I don't really care where it gets rejected. 121, a little higher up off the resistance, a little lower off the roll reversal. I don't really care. But I will not trade if I don't get what I want. Okay? And I will need a reversal pattern at one of those prices, or I refuse to trade. How much confirmation are you looking for? Any type of reversal pattern. So in the day trading course, I think I highlight, what, 6 or 7 reversal patterns? One of them. Or do I use moving averages? Yep. Candlestick patterns? Yep. Reversal patterns? Yep. Yep. Whatever, man. Is it possible to have my drawing tool? You can't have mine, but you can get your own. You pay these people money. Go to Epic Pen. Look, I actually paid them money. Yeah. Go to Epic Pen, pay them money. But they have a free version if you don't have the $5. What time frames? Whatever you're trading, Frederick. If I'm swing trading a monthly basis, I'm probably using a 4-hour, 1-hour combo. If I'm day trading, I'm probably on a 15-minute or a 5-minute. But the strategy always starts at a higher time frame. Okay? So I would look at this and say, I'm a bear. On a 1 hour, I would say that. Now, this is a big move here. I might, right? This might end this way. So at some point, I need to know when I'm no longer a bear. And under these circumstances, I would stop selling. What I'm anticipating as a bear is, okay, here's your triple top. Lower low, lower high, sell. 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 Lower low. I will just keep doing that over and over and over and over and over and over and over again. And if we get up here, stop. Walk away. Adios. Not playing that. Easy peasy lemon squeezy. Easy peasy lemon squeezy. Ooh, uh-oh. Guys, ready for gold, oil, and Bitcoin? Who wants gold, oil, and Bitcoin? Beep, beep, beep. Gold, oil, Bitcoin. Gold, oil, Bitcoin. We kind of did Bitcoin already. We've had it coming down for quite some time, and it's still coming down. Very cool. Very cool. So let's just do this. Right? Lower low, lower high. Lower low, lower high. Lower low, lower high. Lower low, over and 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 over again until it stops working. Cool. Next. Gold. 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 Okay, let's take a look. Okay. This is probably not a gap. Wait, it is a gap if it's a 4 hour. Hang on. That wasn't that long ago, was it? No. So, okay. So that's not a gap. That's a misprice in from the liquidity provider. So, anyways, what are we doing here? He's going to tell. He's going to tell. He's going to tell. He's going to tell. Let us do. How should I put this up? We should do swing trading bullish weekly bias snap. Cool. So we knew. I guess that was a gap. That is Monday, right? Fill the gap, continue mission. All right, so that's what it's doing. Up, fill the gap, continue the mission. That's it. And we knew on Monday that this was our buy zone. Price came all the way down and touched it. And now is going up with an inverse head and shoulders pattern that should lead us back to the top. The target is 117. $1,694.01, if you want to be more precise. Easy peasy lemon squeezy. Oh, faux show. Right? Oh, faux show. By the way, this is the buy zone 2 weeks ago. This is the buy zone last week. This is the buy zone this week. And currently, here's the buy zone for next week. Of course, when I'm doing the swing trading stuff, we're talking about this. What's happening today? Irrelevant. Look at this, though. Isn't that nice? Look how gorgeous that is. Double touch. Double bottom on our buy zone. Lovely. Thank you, gold, for being so beautiful. My euro lira, yes. Euro czar, no. I've been out of euro czar for months. Okay, oil. This is what I talked about when we were looking at CAD yen yesterday, and this is what I noticed. And it looks like I even marked it, which is pretty interesting. Thank you, Wayne. And this tells me continued CAD yen short. Is there another one I told you to consider? What other one did we talk about just a day or two ago? Maybe 2 days ago. Well, let's go to the energy complex and revisit. Ba, 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 ba! Jigga what? Jigga who? Nice. Huh? Do you guys remember doing this? Noki. Up, down, up, down, up, down, up, down. It's slowing, but it's still, okay? And what this says is oil down. Okay, in fact, this says something slightly different. Let me redo this to be more accurate. This says Brent down. Brent is North Sea oil. You have the UK on one side and you have Norway on the other side, and a line down the middle, and they split the oil. So anyways, that's right. So you can look at this as one giant Norwegian sovereign fund collapse. Karl Marx actually was one of the philosophers we would cover, Javier. Right? And all of this really is beautifully written. If you actually sit down and read like The Wealth of Nations, which is Adam Smith, if you read Ricardo, if you actually read their stuff like Karl Marx, they're beautiful writers. Even though they're economic philosophers, it's beautifully written stuff. And then you go and read the Financial Times and you're like, this is garbage compared to what was being written back in the day. Beautiful writers. So I've actually read the first edition of The Wealth of Nations. I had to get a permit and everything. I had to take some training on how to hold the book and everything. They brought it up from the deep archives. And I mean like 12 stories below the ground, right? In a special library, in a special room with special librarians. They brought the first edition of The Wealth of Nations. And I read it. The butcher, the baker, the candlestick maker. It's actually beautiful writing. Like you can actually read it and say, this is beautiful. Very well written and very interesting. No, the book did not fall apart. I was wearing gloves. Cool. So anyways, all of this, look at it, beautiful. So this is just destroying inflation. Kitty cat getting crushed. Yeah, okay, we could do peso because it's near, right, year end. Okay. And it's not quite ready. Okay, it's not quite ready. So what you want to do is flip it over to look for step downs. And you can see we're way early for that. So what I want to see is something like this, okay? And my intention would be here. Okay? So Mexico, for example, actually has quite a bit of oil. Yes, Pedro. I don't want to do Kiwi dollar because it's, okay. You should have a general idea what it's doing. But I'm going to do Kiwi, I'm going to do the one I'm on because it's going to be more interesting because I'm on it, but it should be the same thing because we know in a risk-off movement, you're supposed to be buying dollar and buying Swiss francs. So it's the same thing. So if I move my trades now, let's lock in a few more. So this one, if I get out now, I have 420 pips. And 400 pips is there. It's not quite ready for 400. So I'll just lock in a little more. Okay, that's 350 pips minimum. And we'll move this one. Oh, look at that. It's exactly cool. Cool. So on one trade, I have 350 pips locked in. On the second one, I have 300 pips locked in. Boom! Worst case scenario. Worst case scenario, 650 pips minimum. Nice! Minimum. Cool, right? Cool. Let her run, baby. Let her run, dog. Down, 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 down. Up, up. Sell. Down, down, down. Okay. Alfred Chow wants me to do Swissy yen, but that doesn't make sense to me. I guess if you were trying to figure out which one you're going to play. But notice that my Swissy yen, I have a plus minus next to it. I use it for relative strength. So let's look at it. It might be interesting in this situation. Okay. Right now, this says Swiss franc is stronger than Japanese yen, but that's why I'm buying Swiss franc. You see that, Alfred? Let me change the template. This is the old template. There we go. Okay. So this is telling me on a 4-hour chart, the Swiss franc is stronger than the Japanese yen. Therefore, this confirms that I'm buying the correct asset. Okay, I'm buying Swiss franc. I'm a Swiss franc hog. Okay. Now, I wouldn't trade this because that makes no fundamental sense whatsoever. But it might make sense relative strength-wise, but just thinking about what's happening, it wouldn't actually make any sense. It would make no logical sense to be trading this. Because no matter what, in this scenario that we face globally, the Swissy is going to be strong, the yen is going to be strong. But over each hour and each day, there'll be an ebb and flow back and forth, back and forth. And one might be relatively stronger than the other for a little time, and then relatively stronger than the for a little time, and then relatively stronger for a little time, and so on and so forth. And I certainly would not want to be trading in that. But right now I look at this and say, okay, I've been buying Swiss franc for weeks and weeks and weeks, and I'm killing it. Okay, cool. It means I looked at this and made the proper decision. If I was going to be selling New Zealand dollar or Aussie dollar or CAD, for example, all commodity risk-off moves, what should I be buying against those commodities that I'm selling? Should it be Swissy or should it be yen? Well, based on what we've seen over 6 months of trading, I'd be smart to be buying Swissy over yen, and which I did. You're welcome. Okay, you're welcome. So what I showed you the other day would be like, then you go to like an Aussie play. And before I sell the Aussie yen, I probably should sell Aussie Kiwi, or sorry, Aussie Swiss franc. And then once I'm set on the Aussie Swiss franc, then I can sell the Aussie yen. Okay? Okay? Down, 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 down into my sell zone, sell, right? It took an extra day. Here's another sell zone, sell, right? Sell, 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 sell. Guess what I want to do tomorrow? Now, this is tricky in here because you should know there's also longer term support here. So it's a little tricky, but I'm trying to generalize because I think that's what some of you guys are trying to work on. Just generally making better decisions. Okay? So again, right? Sell, 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 and what about tomorrow? Sell, and the next day, sell, and the next day, next day, next day, next day, next day. Well, use a stop, baby G. Yeah, so Neon says in the last 2 months there's been a 30% drop in oil prices. So that's going to kill inflation. But also, you may notice that there's been a giant rally in the 10-year T-note. In fact, I think we're at an all-time high right now in 10-year T-note prices. The biggest bullish rally ever, okay? So, right, that's the T-note. Why did that get fat? Interesting. Okay? But what's happening? It may be foreigners, but I think there's something else going on here. I think oil has fallen, and it's fallen to the point that many oil producers are not profitable. So profits are down. And high yield energy companies, aka junk bonds, have money flows out. Okay? And there's something called flight to safety. And it's interesting because people are scared enough that they are dumping their junk bonds at 10%. So 6 months ago, I was telling you that people are yield hogs. Well, they were in the junk bond market. They're dumping junk bonds right now. And the flow of money is to safety, which means treasuries. And they're buying the 10-year, the 5-year, the 2-year. And there was some move on the 30-year, but I think it's popped back. So maybe we'll get a slight steepening of the yield curve. But I think they're getting out on the shorter term. So they're buying, I think, the 2 and the 5 and less, which is really good. Because at some point, we don't want them all piling into 30 years, because if they're buying 30-year bonds that are like, they're telling us they never want to get out. So we don't want that. Okay. Team Sound Zone says, why is pound so weak? Besides Brexit? I mean, I don't understand the question. Why wouldn't it be weak? Anyways, so I think that's what's going on here. Is anyone watching the junk bond yield? The junk bond market? Oh, welcome, Andrew. Just seeing if there's something I can find to illustrate this. No, not really, because it's only 2019. Same thing, Andrew, as the person who asked the Swiss franc Japanese yen question. I would never trade them together. I use them for relative strength. It's because I'm a macro trend trader that I would do it that way. So it was disconcerting a couple weeks ago that dollar yen went up with a velocity that it did, which was pretty unusual. Okay. But I would never trade this together. And so what this is showing me is that this is doing what it should be doing. And this is now doing, it's come back to doing, like this move here should never have happened. Okay. So the fact that we're back is good. But they should be at the point where both dollar and, right, yen, both these should be strong. The same thing with Swiss franc versus the yen, because someone just asked about the Swiss franc. What I was trying to say, maybe I'm illustrating this better this way, but under current macroeconomic conditions, the yen should be strong and the Swissy should be strong. So these are two pairs, Swissy versus yen, dollar versus yen. These are two pairs you should not trade, because dollar, Swissy, and yen all should be strong. Now they will move, but what you're missing is, even if you made, let's say, 100 pips on USD yen and you were selling it, you probably missed 500 pips on something else. Or not say, let's not say 500, but let's say 300. In the time you made 100 pips on this, and you're like, look at me, I'm the greatest trader in the world, you gave up another one that moved 333. And you probably should have been on 5 other trades instead of this one trade. So, you know, it quickly adds up to, you're betting on the wrong horse, and you're super happy that the horse made it around the track. And you're like, dude, that's not the point of the race. Congratulations on picking a horse that made the full circle. Great. But there's more to it than that. Okay. So if this is heading down, the only thing this is telling me is I should be short pound yen. I should be short euro yen. I should be short CAD yen. I should be short blah, 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 blah. Aussie yen. I should be short Kiwi yen. You see what I mean? NZD, sorry. Okay. But I also know that yen's not even the strongest. So before I do all of this, I would intend to do all of this, but before I do all of this, under current market conditions, I should be selling pound Swissy. I should be selling euro Swissy. I should be selling CAD Swissy. I should be selling Aussie Swissy. I should be selling Kiwi Swissy. And then tomorrow, then I do, because all those will be profitable, then tomorrow I will sell pound yen, and then I'll sell euro yen, and then I'll sell CAD yen, and then I'll sell Aussie yen, then I'll sell Kiwi yen. And then the next day, all those are profitable. Now what am I going to do? Well, then I'm going to sell pound dollar, and then I'm going to sell euro dollar, and then I'm going to sell CAD dollar, and then I'm going to sell Aussie dollar, and then I'm going to sell Aussie Kiwi dollar. Now I got 15 trades. And the interesting thing, it's all one trade. Risk off. That's it. I got 15 trades that say the one thing. You can look at my trades on a history chart, right? In my track record and say, oh, I see what he's doing. It's risk off. And I'll say, yeah, dude. Zombie apocalypse. Like, right? But of course, also, I told you starting January 1st, I would do that. You guys remember that? It all started before the virus. Right? Now it's just feeding. Now I just can't be long anymore because of the risk. Yeah, Chris, I think we hit the all-time high earlier. Well, thank you guys for thanking me. Make sure you click the like button. There's 200 people watching, and I don't think we have 200 likes. I got to go, though, because we got the swing trading group coming up. So I got to go, everybody. Please leave a like before you leave. 50% of people have not clicked on the like button. Yeah, good Hope. That's a good way to hedge. That's a good way to hedge. So, thank you for being in my life. Thank you for being on my team. Thank you for being a subscriber. Thank you for clicking like and leaving a comment. Thank you for being a client of Trader's Way. And thank you for the hard work that and seriousness that you're putting into Forex. The group will be meeting at swing.fxbootcamp.com. If you join now, you'll get the swing trading course and the day trading course included. Plus, we meet every Thursday to plan next week's trades. So, at 11 a.m. Eastern Time, the swing trading group will meet to plan next week's trades. How do you get in the swing trading group? The best way is either know the secret handshake or just simply insert a credit card. That works every time. How much is it? It's less than $10,000.